Hey traders, TG Watkins here. I'm recording this November 10th, but you guys are going to be seeing this November 11th because I'm not going to be around in the morning. So I wanted to make sure you guys had something for the social media session and to kind of catch up from the day. Now, the reason I have the market update thumbnail up here is because anybody who has not seen it, please go look at the YouTube video that I put out over the weekend, the market update video, and it was called Was That the Bottom? Market Sniffing Out a Government Reopening Soon. So that will also answer a lot of questions that you guys might be having right now, and also help to explain what I'm going to talk about today and how we were able to start seeing today's move starting last week, especially Friday. It was getting close, like Thursday, but Friday was definitely the day that things turned around. We did put a couple trades on, and then I told the Moxie subscribers, like, if the government reopens, the market's going to go up even higher, which is exactly what happened today. So I wanted to run through a little bit of that now that what's happened. The market's going to close here in about 2 minutes, so you'll probably hear the bell at some point. And as far as that goes, what I was talking to the subscribers about was that Friday we bounced actually quite nicely. I really wasn't expecting us to bounce on Friday until news started coming out that the politicians were starting to discuss and negotiate, and likely a government reopening was going to happen probably early sometime this week. And so the hourly 21 made total sense. However, I said on Friday that if the government was going to reopen, the market could shoot up even further, which it did. It initially opened up around the hourly 50 and then continued to press. This is another typical pattern that I look at. So I was expecting that we were going to pull back to the 15-minute 50. That didn't happen today. Maybe it happens tomorrow, so maybe Tuesday, maybe Wednesday. We'll have to see what that looks like. But I think that today was very much of a short squeeze. I do think that maybe some people bought it in through here, although I think if you were going to be really precise about your buys, you wouldn't want to go buy on a gap up like this. So that's why when we had that initial move up like this, it faded for a little bit and then it just caught and went like that. I was looking for price to kind of come down like this, up, and then maybe come a little bit lower here. But I just think too many people were trapped short, that the market just wasn't going to let them out. And so that is what happened. So I put on a call credit spread because I wanted to see us come back to the 15-minute 50. That didn't work for the day trade. So I did put one on today, which is Monday, that you guys will be seeing Tuesday and Wednesday, because I do think this is extended. And the next thing I'm looking for is I want to see price come down to the 15-minute 50 or go sideways to it, something like that. So I sold an out of the money call credit spread for Wednesday, and we'll see how that ends up working. You can also see this was a pretty big day on the hourly chart. There's the bell. And so, you know, we're going up across a downtrending moving average, and the Moxie indicator still below zero. So while I think that the low is in, I think that the market still needs to kind of hammer itself out a little bit. And if we zoom out, we could see that maybe it's going to be something like this. I'm not entirely sure. I'm just saying, I just don't think the market's going to just keep going up like this. You know, it never goes in a straight line. So I kind of think we're going to go up like this, maybe pull back a little bit, maybe kind of do whatever, and then we kind of go higher. So, you know, that's why I think we'll get some time. And then also the last few videos that you guys have been seeing me make, you know, talking about expectations of the market maybe going to 7,100, 7,300, you know, that's way up here. We were very close to it last week, or maybe the week before, but it was unlikely that the market was really going to move up from that place. This was just such a big move. It was overbought. It was extended. It just wasn't going to happen. And so I was looking for price to come down. And then once price on the SPX started to get down to about the daily 21, that's when I was like, okay, let's start seeing if we can get some support. We know we did get a little bit of a bounce, but then we got kind of, 1 to 2, 2 days to the downside that I wasn't quite expecting. But it was those 2 days that actually really just continued to thrust the market lower. And then finally on Friday, we got some news, and then the market was able to move up. So I thought, okay, well, I guess that's what we're looking at. And you can see here, the SPX went right to the daily 50 and then bounced. So if you never knew that this was all caused because of the government shutdown, you'd look at this from a technical standpoint and say, like, well, it just pulled back to the daily 50. What's the issue? So yeah, exactly. But underneath the surface, we've been seeing a lot of things really, really yanked down. We do know that a lot of the AI situation has been yanked down. You know, if we look at the SMH, we can see that this also got pulled down quite a bit. I mean, that was a pretty big move all the way back into this area, almost to the daily 50. And you can see just how quickly, I mean, over the last 3 days, that just very quickly rolled over. And look, we're right back. So seems like there was a little bit of opportunistic movement to the downside, probably from some bigger firms. They're probably thinking, all right, if we're going to go lower, we're going to like really go lower, because we think that the government's probably going to reopen fairly soon. So let's go run some people over and take some liquidity and free up some cash, and then we can turn it right back around when we get that news. So again, go look at my YouTube video from the weekend on Profit Pilot, and you can see I was talking about this, and I was like, yeah, I think we're going to start moving back up, and we finally got that information today. That being said, there's a lot of stuff that needs time to recover. Now, one of them is Lucid. Now, Lucid, I've had this thing, we've been trading for a while, and I'm down on some of it, but I think that as far as the next move, and this is where I was talking to some of the people today, and I said, I don't know if this is the move that is going to take Lucid back up to $30, $40 or something like that, but I think it's a move. And the reason I think it's a move or a local bottom is that we had the low from when we had that reverse stock split, if you guys remember that. And that kind of went down like this, but then look, it shot right back up. And lo and behold, where are we again? Double bottom, right at that situation. And we had earnings and it went back up. You'll also notice that over the last, on Friday, maybe Thursday, even Friday, Lucid was actually up when the market was going down. And this was some of the stuff that I talked to you guys about in the weekend video, saying, hey, I'm already starting to see some divergences. Names like Lucid had already been going down for a few weeks while the market was still going up. And so they were already down. They were just waiting for the rest of the market to go down. And so that meant that they were starting to kind of hammer out a low. And I think what we're starting to see here is I think price is going to start hanging on to and holding and using the hourly 50 as support and starting to move back up. So I think there's an opportunity here. I wish it would, I hope it turns into a bigger trade. I don't know. But I think that if you wanted to take a trade, I think this is an opportunity for something like that. We can also see that there are some other areas like this, WGS. And this is where when the market melts down like this and is really weak underneath the surface, go look around at the market. See what doesn't care that the market is going down like this. And you can look, and we came across WGS. Now, we were in this before the market ever started throwing a little hissy fit, but you can see that for the most part, it didn't really care that the market was going down. And so, of course, when the market then turns around, what does this thing do? Starts to turn around, practically breaking out. And so this is another good looking stock that's out there that I really liked. Now, from our own team at Simpler Trading, we had Sam, and he did CrowdStrike, CRWD. And this one, you can actually look, you can see just how much of a short squeeze this also had right there. Also that compared to the market, it jumped up, pulled back, and then zipped up there. So that's definitely a short squeeze. But going into it, look, it went right to the daily 21, actually did a double bottom right there on the hourly chart. And you can see it put in a higher low, even though the market on Friday, so again, this was Friday, the market put in a lower low. And if you look at CrowdStrike, it put in a higher low, and these were some of the divergences that we were starting to see coming into last week, or especially towards the end of last week. So that was something. He made a good trade on this. I think that there's still more upside. Of course, I'd love to see a pullback, but I think that generally speaking, CrowdStrike is looking pretty good in this kind of market. We can even look at RSP, and this is another thing that I've been talking to the Moxie subscribers and traders about, is even though the market, the S&P and the FANG stocks and the NASDAQ were making lower lows, look at the equal weight. This is really a tale of two different markets out there, of the cap weighted versus the equal weighted. And you can see that even towards the end of last week, yes, it was down, but it was basically back into the prior lows. It was doing a double bottom. And look at the Moxie indicator. Moxie indicator was looking great. Talk about that positive divergence. And then on Friday, it turned right back up, and now we got a continuation today. So, this is good. Now, it doesn't mean that everything is totally out of the woods. Like I said, I didn't actually buy anything today because the market basically just jumped up and then ran. This is not where I really want to jump in on the long side. I still need to see these things kind of wiggle their way through, turning from a pullback to an uptrend. And this is really just a couple days worth of upside. So I'm really not quite committed yet. I want to see if we get some pullbacks. I want to see some flagging in here. I want to really make sure that we are confirmed to the upside. And so I've got some things that I'm looking for with that. The Moxie subscribers know what I'm looking for. If you guys are interested, come over to simplertrading.com and you guys can figure out more about how I teach this and what I'm looking for. But yeah, I want to see these things come down a little bit, hammer it out, and then maybe sometime mid mid to late week this week, we can actually see these things recover. And then we can actually start to see the equal weight and the IWM and the SMH and you name it. Hopefully we can see the rest of the market actually starting to go strong into the end of the year, because I think this actually was good for the market. I know that it was kind of uncomfortable for us, being traders in this, but as far as a market situation, I think overall it probably made for a healthy situation, because it kind of freed up some liquidity and kind of shook out some weak hands. And now we are starting from a lower spot. So I think we're good. Plus, remember, government reopened. I really think that was the big deal about this last week and why the market really rolled over, because the liquidity was just really drying up. Okay, so remember, guys, simplertrading.com/Moxie, and we'll see you at the next one. Take care.